welcome to the Individual Investor Show. My name is Jenna Brashear, your host for this evening. Thanks again for tuning in. I hope you all had a wonderful week. We are excited to bring you yet another II show. Tonight's event is the Individual Investor Show, new A+ investor enhancements and tools, plus crucial tax tips. And I want to preface tonight's presentation by reminding our viewers that AAII is a nonprofit educational group and is not a financial advisor, and thus is not able to provide personal advice. Every investor is different. That's why our goal with each broadcast and article is to educate you on how to make better financial decisions. We are overjoyed by how many people attended our last II show, and always we appreciate the support. If you have any questions or suggestions about upcoming topics for the show, feel free to reach out via the comment section below. As the holiday season approaches, we were excited to chat with Wayne Thorp, AAII's Head of Research and Analysis Products, about some exciting new enhancements to our A+ Investor service. A+ Investor gives members exclusive access to countless resources and tools to jumpstart their investing journey. In the second part of tonight's broadcast, we sit down with Charles Rotblut, AAII Journal editor and creator of the PRISM Wealth-Building Academy, to discuss our popular tax guide just released in the December 2021 journal. Rotblut explains how to take advantage of tax deductions before the year comes to a close. You definitely will not want to miss these exciting interviews about A+ investor enhancements that can help you invest smarter in the new year, and our end-of-the-year tax advice that could potentially save you thousands. So without further ado, sit back, relax, and enjoy our presentation. Hello, Wayne. Thanks so much for making time to talk with me today about the exciting new enhancements to our A+ investor service, which members can look forward to accessing in the next few weeks.
Thank you, Jenna. Glad to be here.
My first question is focused on understanding what A+ investor is and how members can benefit from its numerous tools and resources. So the first question is, for those viewers who aren't familiar with A+ investor, what would you give as an overview of the service and give a little background on what members can expect?
So A+ Investor is an online investment discovery, analysis, and tracking platform. When we started putting together A+ a couple years ago, actually probably 3 years now, we really took a step back and thought, what tools, what resources does an individual investor need to be able to make intelligent investment decisions? And based on that, we built a tool that offers the ability to present stock, mutual fund, and ETF ideas to individual investors, as well as tools that individuals can use to do a deep dive analysis of these stocks, mutual funds, and ETFs to decide whether or not they are worth investing in. And then a final layer then is a tracking component, and that's the My Portfolio tool that is available not only to AI members, but as well as some additional tools and resources within A+ as well. And with My Portfolio, then users can track their portfolios, either watch lists or their actual holdings. So that's A+ really is that one-stop shop for investment discovery, analysis, and tracking.
And what sets A+ Investor apart from AAII's other subscriptions?
A+ Investor, it's really, in my mind, A+ is for the real do-it-yourselfer investor. We have our model portfolio products. So we have dividend investing, stock superstars report, and VMQ stocks. Those are intended for people that are interested in investing in individual stocks, but want that vetted collection of ideas and the sort of the management on both the buy and the sell side of things. So that's where, if you're interested in investing in stocks, but you really don't want to go it alone, that's where our premium portfolio products come into play. But A+ is really for the do-it-yourselfer who wants to, dive in, do the deep research on stocks, mutual funds, or ETFs to decide if they meet their own personal investment characteristics, their risk tolerances, time horizon, et cetera, as well as to track them. So I think that's really the big differentiator. It's for the person that wants that platform to kick the tires, look under the hood, and decide whether or not they want to make investment decisions, or even analyze their current holdings as well.
Excellent. And what is your involvement with A+ Investor?
Well, I mean, Overall at AII, I'm head of research and analysis products. So, overall, I'm responsible for, the enhancement and development of our current stable of products, as well as, thinking about additional products down the line. So a few years ago, I was tasked with being the project lead for A Plus Investor. So working, extensively with our other analysts, our programmers and whatnot. I sort of shepherded A Plus through the development and creation phase to launch. And then post-launch now, I'm still the project manager for A Plus Investor, as well as sort of the quote unquote lead analyst. I write the weekly Making the Grade email that goes out to all A Plus Investor subscribers as well.
And since you have a lot of experience with A Plus Investor, what are some of your favorite features within the service?
It's kind of like a parent. I've been at AAII almost 25 years, so I've been involved in development of many products at AAII, and I can't say I have one favorite over another, but I definitely have some favorite aspects of A Plus. And actually, if you don't mind, I'm actually going to share my screen here just to give everyone viewing some ideas of some of the tools and resources that are available. Obviously, we have a very small amount of time here, so I just want to touch on a few things. But there's the My Portfolio element of A Plus, and as well as I said, a part of AI membership. It's the typical portfolio tracker, watch list tracker. But one element that I really like is we have a series of mutual fund and stock grades that are available within A Plus. And when you're looking at a portfolio within My Portfolio, we have a grades tab, and these different grades for both stocks, ETFs, and mutual funds give you a nice snapshot of your current holdings. So the stock grades really are one of my most favorite things of A Plus, and with the A Plus stock grades, they offer an objective framework that you can evaluate stocks across different sectors, things like that, using 5 well-known investment factors. So you have value, growth, momentum, estimate revisions, and quality. So for your current holdings or a stocks that you might have in a watch list, you get a very good idea right off the bat of the quality, quote unquote, of these different stocks, again, based on this very objective framework. But then we also have grades for ETFs and mutual funds as well, looking at different performance periods, expense ratios, as well as their risk. So again, a very nice snapshot of your current holdings. I talked about the stock grades, but we have stock evaluator pages for the roughly 7,000 stocks that we track in the A Plus universe, and you have, pardon me, you can within the stock evaluator page, we have this grades tab where you can do a real deep dive and look at the underlying fundamental data points that make up each of these 5 A Plus stock grades. So you can do a much deeper dive when you're trying to evaluate a given stock. So I really like that feature. It's definitely amongst current A Plus subscribers. The stock grades definitely are a favorite element. And then taking the stock grades one step further, we actually have a stock grade screener. So for example, I'm a value investor at heart. So with the stock grades screener, I can look and say, I want stocks that have a value grade of A. That means that they are the deepest value stocks that are out there. So, by just looking at stocks that have a value grade of A, we've gone from roughly 7,000 down to 1,200 stocks. So you've narrowed that universe down very quickly, but that's still a lot of stocks that you want to evaluate. But you have 4 other grades that you can be running these filters on. Another thing that I'm really interested in as an investor is quality. And when we developed the quality grade for A Plus Investor, we back tested and looked at the performance of stocks that grade A, B, C, D, or F. And we found that over our 15 to 20 year backtesting period, we found that at every higher quality grade, the performance of those groups of stocks improved. So basically, we found that the stocks that do grade A as far as quality grade better than B, B grades better than C, C grades better than D. So I always like to look for stocks that have a quality grade then of A. So that immediately then drops us down to 304. And then another element that I really like is looking at momentum. One of the big risks of when you invest in value stocks is the quote unquote value traps. So you buy a stock that looks to be attractively valued based on price earnings, price to book, et cetera. You buy them, but they never go anywhere. They stay value or they become even more valuable as the price drops. But one way you can overcome those potential value traps is by looking at stocks that have good momentum. So we have this momentum grade built in as into the stock grade screener. So let's just move this up. Let's look for have a momentum grade of A. So we've already gone from 7,000 stocks to only 44, looking at strictly grade A grades for value, momentum, and quality. But depending if you're a growth investor, you could look for grades of A. You might not care about value. If you're a pure momentum, so you can mix and match these different grades to really narrow down the stocks that are in the universe. And then lastly, and we're talking about this a little bit more, but the newest addition to A+ Investor is our custom stock screener. I am the program manager as well for our Stock Investor Pro screening software package, and trying to move that software-based package to an online version. The first iteration of that is the AAII custom stock screener that we launched about a few months ago. And with this, you have roughly 77 different stock fundamental filters that you can run against the universe of 70,000 or so, 7,000, I'm sorry, stocks or so. And then you can save these screens for future use. You can export data and things like that. So those are some of my favorite aspects and elements of A+.
Excellent resources. And you mentioned that we recently launched some new features like the AAII custom stock screener for subscribers. Can you tell us a little bit more about them?
Yeah, as I said, we have the custom stock screener. So with that, you can build your own stocks filters. So let's say, for example, we've integrated the A+ stock grades into the stock screener as well. So the one slight difference with this versus the stock grade screener that I showed earlier is you can actually, I can save my value, momentum, and quality screen of A, and I can save this for the future and come back to it every time. That is one thing that I'd like to maybe add to the stock grade screener at some point, is the ability to save the filter settings that you've created. But so here again, have my value, momentum, and quality grades of A. 44 companies pass again, so that's good. Same results on two different services, so that's always a good thing. But then I can come and I can save this. So and then I can come back to this at any point in time. So if you're interested in learning more, I created an intro video, that really I actually gave an hour-long seminar when we first launched this on the custom stock screener alone. But some other new features that we recently added to the custom stock screener as well is we've actually now integrated all of our 60 or so stock idea screens into this. So well, someone would be like, why, I can access these screens already on our website. Well, first of all, as a base AI member, these passing companies lists are updated monthly, and with A+ Investor, they're updated daily. But one nice thing that goes beyond that is you can take one of these predefined stock idea screens. So I'm a big fan of John Neff, well-known professional money manager, value-oriented screen. So I can reset things. This is interesting. Always the risk when you're live with technology. So let's try this again. Okay, so as of the close of yesterday, 4 stocks pass the John Neff screen. So we have Select Medical, DR Horton, Encompass Health, and Markel Corporation. Now, what you can do, though, is you have these lists of companies. You can then also apply your own filters to these screens. So let's say, for example, one thing I'm always looking at whenever I'm looking at any of these screens is I'm very interested to see making sure that any of the companies that pass these screens have a quality grade of A. So what I'm going to do now is I've got my 4 companies that pass the Neff screen and see, do any of them, so 2. So of the 4, DR Horton and Encompass Health Group have quality grades of A. But you can take the results of any of the 60 or so stock screens that AAII tracks and now apply your own filters to those as well, stock grades, additional fundamental aspects, and things like that. So this is a feature that we've just launched within probably the last week. I've been working very intensely with our great group of programmers, and they've recently launched this. One of the aspect that, one of the things as head of research analysis products is I'm constantly listening to our members and our subscribers. And, the feedback that we get, the suggestions we get are our key driver in what we decide to be working on as far as new products as well as enhancements. And so, one of the requests definitely was to implement the new the stock ideas into the custom stock screener, but we now also allow people to export data from these tabs as well. So, if you're interested in looking at the different growth rates that we track with the custom stock screener, for the 2 companies that are passing my filters, I can click this and I'll export the data to an Excel spreadsheet. And so then I can go forward. So I have this data, I can manipulate it within Excel, I can save it, everything like that. So that's another feature. But just to let people know too, beyond, the stock screener, and really, again, focusing on the fact that we listen to our subscribers very closely, is the fact that when we launched My Portfolio back a couple of years ago, it did not allow users to track closed-end funds. Well, we now have the ability for users to track the 500 or 600 closed-end funds that trade in the United States. So you can now track closed-end funds with My Portfolio, as well as we've recently, probably within the last few months, added roughly 500 or so Canadian stocks that now are able to be tracked as well within My Portfolio. So those are some of the, don't want to give too much away ahead of the webinar in December, but those are some of the more important and weighty enhancements that we've made to A+ recently.
Excellent. And you mentioned, how we listen to our members to see, what they would like to see, with new enhancements coming out. But is there any other factors that you take into account when you're creating or adding new enhancements to our AAII services or other products?
Well, I mean, being a membership organization, we have to be, very cognizant of the needs and desires of our members. And so we, sometimes people complain a little too much, but we're constantly surveying our members, whether it's in net promoter score surveys for our premium products, our annual membership survey that we go out, or occasional ad hoc survey emails that we go out. Please realize, if you do get those and you feel that they're a little too often, I apologize for that. But please know that those are invaluable to us to make our services better for you, the viewer, and members. So, whether it's looking at our NPS surveys, our member surveys, but really, we try to, when we prioritize, it's, what's going to be most impactful for our members, for our subscribers to, solve their problems, answer their questions, and at the end of the day, help them become successful managers of their own assets. But then we also, we look at the market. We have to be anticipatory as well. So, we're constantly looking at the market, what competitors are offering, in ways in which we could be, thinking, 2 or 3 steps down the line as far as products that we might be rolling out in the future.
And as far as other enhancements, is there anything else that A+ Investor subscribers can be on the lookout for in the next upcoming weeks?
Well, actually, it's interesting you said that. I spent an hour and a half in meetings this morning with our marketing department and leadership, talking about just that, what we'll be working on over the next year, and some things that A+ investor subscribers can be looking for in the next few months and beyond. We're going to be working on email alerts, both for price change as well as stock grade changes for A+ subscribers. So we're actually, that's the goal, is to roll that out hopefully by the end of January. I've also we've been working on expanding the diversification analyzer, which is a tool that is part of my portfolio, but is exclusive to A+. But being able to do more granular diversification analysis based on geographic region and different portfolio characteristics. So that's when we'll be also integrating that data into the fund and ETF evaluators that are available on our website. And then, it's constantly reviewing these surveys. And I have a wish list, a prioritized wish list in a spreadsheet that's, probably 60 or 70 lines long of things to be working on. But those are the things we're going to be working on over the next few months. It's making enhancements and improvements to the workflow of my portfolio. And then, even some, hopefully in the next year, some exciting new products as well. So definitely stay tuned.
And if someone is interested in trying out A+ Investor, what should they do and where can they go to find or purchase A+ Investor?
Well, actually, ahead of my webinar in December, we're actually running a special right now for A+. So AAI members that are new to A+ can sign up for a 1-year subscription for $97. That's roughly a 35% savings over the original list. You also can get additional savings by signing up for a 3-year subscription for $195. And you can find that by going to invest.aaii.com/A+-member-sale. And I'm sure probably, Jenna, you'll probably have a slide to pop up for that as well. But yeah, right now, again, for the next few weeks, we are offering a special on A+.
And yes, I will include all of the resources at the end of the video, and then as well as in the YouTube description when our II show is posted. So it'll be great. And then you're hosting an A+ Investor webinar on December 15th. What can members look forward to by registering for this live event?
Well, I mean, basically, it's going to be an open house to learn more about A+. I've given webinars on just different elements of A+ that have lasted an hour. So it's really, again, it's going to be a deeper dive than what we've done here in our time today. But it's basically, hitting on what I think are, the most important, most unique, most impactful elements of A+. And A+, again, it's for everyone. So if you're a stock investor, a mutual fund investor, or an ETF investor, I think we offer a little bit of everything for no matter what types of investments that you're interested in. But if you're want to learn more about A+ Investor, this is be a great opportunity for you to learn more about the most important and most impactful elements of A+.
And thank you so much, Wayne. I really appreciate you taking the time to meet with me today and giving us a little bit more information on the A+ Investor enhancements.
Oh, my pleasure. It was great talking with you as well, and to you and everyone else viewing out there. Everyone, stay safe, and stay healthy.
Excellent. Yeah, no, I agree, and I second that. And if you'd like to learn more about subscribing to A+ Investor, you can visit aaii.com/plus, or like Wayne suggested, the invest.aaii.com/A+-member-sale. And I'll include those links, like I said, at the end. And lastly, you can register for Wayne's upcoming webinar that we mentioned on December 15th from 1 p.m. to 2 p.m. Central at aaii.com/webinars. And I'd like to thank you again, Wayne, for speaking with me. And I hope you have a wonderful rest of your evening.
Thank you. Same to you, Jenna.
Thanks. Hello, Charles. Thanks so much for taking the time to talk with me today about your annual tax guide in the December AAII Journal. As the year comes to a close, it's important to understand what to expect in 2022, as well as how to take advantage of tax deductions before we ring in the new year. And my first question is focused on understanding what members can find out in our annual guide. What changes should investors expect when they fill out their 2021 tax returns?
Well, the nice thing is for many taxpayers is we won't have many significant changes. We certainly had a lot following the 2017 Tax Cuts and Jobs Act. We had some changes last year due to the pandemic. This year, when you look at your 2021 tax return, there aren't big changes. There will be a line on for the stimulus check. So if you received the economic recovery rebate earlier this year, or maybe you didn't, but your income dropped this year, there'll be a line on that. The good news is, like it was last year, if you received a rebate and your income this year actually went up from last year, so you received a bigger credit than you should have, or perhaps you should have qualified for a check and you got one, you do not need to pay it back. And like last year, if you received a rebate, there's no income tax. It's your money to enjoy as you would like. There is a carryover of the charitable deductions. So last year, people can take $300 out. People who took the standard deduction could write off up to $300 of charitable deductions. That's been made a little bit more generous this year. Also last year, there's the cap on deducting charitable donations. Sorry, stumbling over my words. The cap on writing down charitable donations, if you itemize, was actually lifted as well. So that's changed. Those people who are engaged with cryptocurrency should note there is a line on the new 1040 where you have to check saying, yes, I bought or sold cryptocurrency. So there will be some new reporting requirements for that. As I say in a tax guide, even though the cryptocurrency might be virtual, the taxes you owe on it are real. So be aware of that as well. There's also an expanded child tax credit that went into effect this year. I do discuss in a tax guide, there was advanced payments made during the second half of the year, a larger child tax credit. The rules on it are get to be a little bit tricky, particularly if there's joint custody of a child. Someone in that situation where maybe they had a child during certain months and maybe their ex had the child in the other months. I would consider meeting with a tax professional if you have concerns about how that tax credit works, because it does get a little bit tricky and I don't want to steer anybody the wrong way, but we do provide an overview of those changes in the tax guide.
That's great. And you mentioned charitable donations. Can you expand a little bit about what kinds of deductions that members can expect in the new year?
Yeah, absolutely. And this is great. So for the majority of people who do take the standard deduction, the IRS is allowing them to deduct up to $600 if you're married filing a joint return, or $300 if you're single or you're married filing separate returns of cash donations to a qualified charity. Now, if you make a donation with a credit card, that counts as a cash donation, but you can't say, oh, here's this old winter jacket, I think it's worth $50 and I donated it. That's not deductible. But if you make an actual cash donation, either check, credit card, or cash, that is deductible. And the nice thing is, if you take the standard deduction, you still can write it off. So it's a really nice benefit. So you're able to get a benefit for doing some good. You do have to make those donations by December 31st to qualify. Now, there's two things that are different from last year, because we had the deduction last year. Last year, the cap was $300, regardless if you were married filing joint returns or if you were single. This year, it's doubled if you're married filing a joint return. The other thing was last year, when you took that deduction, it reduced your adjusted gross income. This year, when I looked at the draft of the 1040 form, it actually came after the adjusted gross income. Now, this does sound like it's going into a little bit of the weeds, but there's various numbers that are based on your adjusted gross income and also when you take the standard deduction. So this could make a difference for some people as to how much they might pay in Medicare premiums, say 2 years from now, and some other numbers tied to the adjusted gross income. So if you're close to that break point between being above or below based on your adjusted gross income, based on your modified adjusted gross income, this could make a difference one way or another. For a lot of people, it probably won't, but it is a little, it is a refund you can get from doing some good.
It seems very timely as we're approaching, the end of the year that,
Mhm.
to make those charitable donations. And so many members take required minimum distributions. Are there any changes?
Yeah, so there's two changes. First of all, last year in 2020, the required minimum distributions, your RMDs, were suspended for a year because of the coronavirus. That suspension was only for last year. This year in 2021, you are required to take your required minimum distribution. Those people who have not need to do it by December 31st because there's a very big penalty if you don't. Now, if you turn 72 this year, you do have until April 1 of 2022 to take your required minimum distribution. It's important to realize the way the tax code is written, if April 1 falls on a weekend or on a holiday, that deadline does not change. It's still April 1. So you do have that option to do it. But if you turn 72 this year, you wait until April 1 of next year to take your RMD for 2021, you still have to take your 2022 distribution by December 31st. So you're doubling up on that. The other thing with required minimum distributions is they're changing the tables. So next year, there's the life expectancy tables, which determine how much of an RMD you're required to take. That will actually assume longer lifespans next year. So in essence, what it'll do, it'll reduce the amount of RMDs required to be taken each year, but your required minimum distribution is based on the balance of your IRA as well. So there's two components. One is these tables that basically you're at this age, we expect your life expectancy is going to be going out to X age. That's going to reduce it. But then if your portfolio rises in value, that means you're going to take a larger required minimum distribution. So there's two levers at play. So a lot of people may not notice it, but that is going to go into effect for 2022.
It's really good to because December 31st is going to come up really quick, especially with all the holidays. So that's good to highlight that members can find in the tax guide. And you also wrote about mutual fund capital gain distributions in the tax guide. Could you share a few trends that you are seeing?
Yeah, unfortunately, they're not very favorable to a lot of investors. So mutual funds and even ETFs are required to distribute capital gains distributions by the end of the year. There's a website, Cap Gains Valet, and I referenced the name in the guide. So if people want to go to it, they track mutual fund distributions. And the one trend they've seen this year is a number of funds that are giving out distributions of at least 10% of net asset value. So net asset value is basically the value of assets each share in a mutual fund or an ETF represents. Those are, as of November 16th, which is actually a later date than we use in the tax guide, 542 funds have so far announced distributions of at least 10%. That's right now, we're on track to actually have the largest number of large capital gains distributions in at least 8 years. And to put these numbers in perspective, right now we're at 542 funds for 2021. In both 2019 and 2020, there were approximately 200 funds each year announcing these large distributions. So this is not going to be a very friendly year for investors holding those mutual funds in taxable accounts. Now, if you hold those funds in an IRA, a Roth IRA, or 401k, it won't matter much. But if you hold them in a taxable account, you could be looking at a nice hit to your, well, I shouldn't say nice, a kind of a big hit to your taxes. And what's painful about these mutual fund distributions, and ETFs can also do those as well. So even though ETFs are more tax efficient, they're not completely tax efficient. So you can be hit with these as well. But what's really bad about these is you could actually incur taxes on mutual fund, have that mutual fund drop in value and still own the taxes because of the way those distributions are being made. So if you're looking right now at perhaps buying a mutual fund in a taxable account, talk to a mutual fund company and see when they're going to make that capital gains distribution, because it may very well be worth your while to wait till that distribution is issued before you buy the mutual fund, so you avoid taking a tax hit right after you buy the mutual fund. The other point I'll make is think a lot about asset location, meaning what type of account do you hold, what type of investment. So if you're holding particularly an actively managed mutual fund that's not very tax efficient, consider holding an IRA, a Roth IRA, or if you're able to, perhaps your SEP IRA or your 401k plan. So these capital gains distributions don't bite you come tax time.
That makes sense. And so workers will be able to save more in retirement in 2022, or is that correct?
That is correct. And so that's a nice little bonus. So the limits on what you can contribute to a 401k plan, a 403b plan, a 457 plan are going up by $1,000. So it's going up to, I'm looking here at my notes, it's going up to $20,500 from $19,500 this year. Now the catch up if you're age 50 or over staying at $6,500, but what it means is in 2022, those age 50 and over can contribute up to $27,000 to their 401ks. It's $20,500 if you're under the age of 50. Now I do realize that's a big number, and a lot of people aren't able to make that large of a contribution. But if you are, it is a nice little boost to your 401k. Now, I will also point out for those higher earners, Social Security taxes are actually going up as well. I'm going off memory here. They're going up about $4,000 or so. So you will have about $4,000 approximately more of your income subject to the Social Security withholding taxes. So that might play a role in some people's budgeting decisions. For those people contributing to IRAs, the limit of $6,000 is saying unchanged in 2022. It was last raised in 2019. And with that $6,000, if you're contributing to an IRA and a Roth IRA, realize that's $6,000 total. You can't put $6,000 in an IRA, turn around, put $6,000 in a Roth IRA. But you could, for instance, say, do $3,000 in an IRA, $3,000 in a Roth IRA, or any variation of that $6,000, depending on your choosing. But that number hasn't changed. And also the $1,000 catch up, if you're age 50 or over for IRAs, that has not changed either.
That's good information. And as we're recording this, the House of Representatives was going to vote on the Build Back Better bill. How would this impact most members?
Yeah, and I want to point out that we are recording this on November 19th. And actually, right before I shut the TV off to record this, it looked like the House just passed the bill. So it's now going to the Senate, where you look at moderate Democrats such as Joe Manchin. It'll be in, we don't know exactly what changes he's going to be wanting to push through, but we do know. I'll explain what we know about the bill now, and I will point out those watching this, some things might have changed between now, the time we're recording this and the time they're watching it. But what we know right now is the bill does include a larger child tax credit, extending the larger child tax credit from 2021 into 2022. It also includes the advanced payments, which means that you don't have to wait to the end of the year to claim that child tax credit. You can actually receive advanced payments throughout the year. They're making it fully refundable as opposed to partially refundable as it is now. Although in 2021, the child tax credit is fully refundable. In 2022, it's only partially refundable, although this Build Back Better plan would change it. There will be new credits available for purchasing electric vehicles. So if somebody's looking at Tesla, maybe the new Ford Mustang or some of the other electric vehicles, you may want to look into those credits as well. Presuming, of course, you can find one on the lot to actually buy. Hearing aids will be covered by Medicare in this bill, and that's a big thing. And one thing I'll just, as a quick aside, I will encourage people to get a hearing test regularly because there's a lot of research showing that hearing loss contributes to cognitive decline. And so one of the ways you can prevent, say, dementia, perhaps postpone Alzheimer's or other things like that is taking care of your hearing. So regardless if they're covered or not by Medicare, it's really important to hearing tested. And if you need hearing aids, to consider getting those. There will be a surtax levied on income above $10 million. That's going to affect a very small number of taxpayers. So I want to emphasize most taxpayers will not have incur this levy. It'll be a very small number in absolute terms that will be affected by this. The deduction for state and local taxes, the SALT taxes, that's currently at $10,000. That was set by the Tax Cuts and Jobs Act. It's in place through 2025, and it's not indexed to inflation. So people living in higher tax states, as we do here in Illinois, that's capped at 10,000. The plan passed by the House raises that up to about $80,000 for most taxpayers. That might be something that gets changed, and when the Senate looks at it, we shall see. And there's also a tax on corporate buybacks. Now, if that actually gets passed through the Senate, it's hard to say exactly what impact it'll have on corporate decisions. Do they shift some of that money back into stock dividends? Do they, cut back on buybacks? We don't know. Politically, it's a very popular thing to pass among certain people in the political realm. I will say the research shows that when stocks are bought back, it does actually help shareholder returns. So that's one thing we'll see how that plays out and what impact that it has. Too early to say. And as I said, we're talking about the bill as we know about it now in late November. This could change once it reaches the Senate. And again, there's no guarantee that Christian Semina or Joe Manchin are going to support the plan in its current form. So we shall see what happens.
That makes sense. And I'm excited to hear more about that. And is there anything else you'd like to highlight from the tax guide?
Yeah, the one thing I will point out is actually with inflation adjustments. So in October, annualized CPI ran at 6.2%. The Tax Cuts and Jobs Act implemented the use of chain CPI. And I realize that sounds like I'm using some pretty technical terms. CPI is usually the headline inflation number most people hear about. Chain CPI is a slower number. So CPI looks at the change in prices for a basket of goods and services. Chain CPI assumes you're going to substitute. So, maybe if you go to the movies and you see movie prices are really expensive, maybe you opt to stay home and watch Netflix, just to give people a very simple example. And so chain CPI assumes those changes. So what that means for 2022 taxes is when we look at standard deductions, tax brackets, certain exemptions, certain phase-out levels, certain limits, those on average are rising about 3.1% in 2022. So if you're right at the bracket for certain phase-outs, for certain deductions, for certain taxes, or even when we look at how much of your Social Security taxes are being taxed, how much of your Social Security benefits are being taxed, or what you might pay in Medicare premiums for 2024, which will be based on 2022 taxes, that could have an impact. Now, if you weren't close to the brackets, it won't have much of an impact. But if you're close to those brackets or certain thresholds, it could actually play a role. So this is some lingering effect that we're actually seeing from the Tax Cuts and Jobs Act, and it could have an impact for certain people.
And thank you so much, Charles. Members can check out the full issue of the December issue of the AAII Journal at aai.com/journal. And I'd like to thank you again, Charles, for speaking with me today. I had a wonderful time, and I hope you have a great rest of your evening.
Thank you. You too, Jenna.
Thanks. And now for a message from our friends at Discover Bank. We know as individuals interested in building investor wealth, you never want your money to be idle. Even small dollar amounts for short amounts of time should be working for you. With that, we're pleased to share information from our partner Discover Bank on deposit accounts that keep your money moving. You can choose from several options to help you meet your short-term or long-term financial goals. The best part, all of the deposit accounts offer preferred member rates. Take a look. With Discover, you can earn over 5 times more interest than the national savings average with preferred member rates and pay no fees. That's no fees, period. Plus, no minimum balance is required. You can access your AAII member savings account with Discover Bank from your smartphone or tablet, so it's easy to keep your money moving in the right direction. Open an AAII online savings account to start saving for the future today. Visit aai.discoverbank.com to learn more. We hope you enjoyed tonight's broadcast. I want to thank Wayne Thorp and Charles Rotblut for making time to chat with me today. And after speaking with them both, I'm excited to delve into AAII's annual tax guide, as well as try out the new A+ Investor Enhancements. With AAII's resources, I finally feel prepared for investing in the new year. And as always, please remember to click the subscribe button if you'd like to be alerted of future II shows. As Wayne mentioned earlier in the broadcast, we are running a limited time new member exclusive deal on a 1-year subscription to A+ Investor for only $97 or a 3-year subscription to A+ Investor for only $195. You can visit invest.aai.com/A+-member-sale to take advantage of this opportunity. And to prepare for some of those December 31st deadlines, you can check out our annual tax guide at aai.com/journal. Lastly, if you'd like to register for upcoming events like the A+ Investor Enhancement webinar hosted by Wayne Thorp, visit aai.com/webinars. And with that, we wish all of you viewing good health, good fortune, and a great evening. Thank you and take care.